Hello everyone. Today I'll be discussing an important economic issue that impacts India's fiscal health, tax compliance. Tax revenue is crucial for funding public infrastructure, welfare programs, and economic growth. However, India has historically struggled with low tax compliance, resulting in revenue shortfalls and increased fiscal deficits. Firstly, I would like to talk about the state of tax compliance in India. India has a low tax to GDP ratio, hovering around 10 to 12%, which is significantly lower than many developed economies, where it exceeds 25%. Despite having over 1.4 billion people, only about 6 crore individuals file income tax returns, and an even smaller fraction pay taxes. The key challenges that India faces in tax compliance are firstly, the large informal sector, nearly 80 to 90 million enterprises in India operate informally, which means that they do not register for GST or file income tax. Additionally, there are a lot of informal workers, primarily in labor-intensive sectors, such as households or labors in the manufacturing or factories. Second, tax evasion and black money. Many businesses and individuals underreport their income to avoid taxes. Thirdly, complex tax system and high compliance costs. Frequent policy changes, multiple tax rates, and complex filing procedures discourage individuals and businesses from voluntarily complying. GST compliance, multiple return filings, and documentation burdens make tax filing a hectic process, especially for small businesses. Lastly, low tax morale and trust deficit. Many taxpayers feel that they don't get adequate public services in return for the taxes they pay, reducing their willingness to comply. The measures to improve tax compliance. First would be simplifying tax laws and processes. The faceless tax assessment and e-filing initiatives are steps in the right direction, reducing harassment and increasing transparency. A simpler tax code with fewer exemptions and lower rates can encourage voluntary compliance. Second, strengthening digital infrastructure, expanding AI-driven tax surveillance to detect suspicious financial transactions and track high-value purchases. Widening the use of Aadhaar PAN linking to track financial activity effectively. Third, expanding the GST base, encouraging small businesses to register under GST by simplifying filing requirements and reducing compliance costs. Fourth, incentives for voluntary compliance, offering lower tax rates for early filers and rewarding consistent compliance. Lastly, strengthening enforcement, expanding data analytics and AI-based tracking of high net worth individuals and businesses engaging in tax evasion, imposing stricter penalties on them for tax fraud while ensuring ease of compliance for honest taxpayers. The barriers to implementation for tax compliance are first would be political resistance. Measures like taxing agricultural income or removing exemptions can be politically sensitive. Structural issues with a significant portion of the economy still cash driven, it is difficult to monitor all transactions. And lastly, enforcement challenges. Many tax authorities still rely on outdated mechanisms and corruption remains a concern in most of the cases. The road ahead by implementing transparent, simplified, and tech driven tax policies, India can improve tax compliance, expand its revenue base, and reduce fiscal deficits. If the government ensures fair taxation and better public services, more people will be willing to contribute to the nation's growth. Tax compliance is not just about enforcement, it's about building trust and ensuring that people see value in paying taxes, that they feel that the taxes that they are paying, they are getting the services with respect to the taxes that they pay. A well-structured tax system will lead to higher revenues, better infrastructure, and improved public services, ultimately driving India's economic growth.